Welcome to the Real Retirees of New Jersey, powered by Liberty Financial Group and Artemis Wealth Advisors. Randy and Peggy Fisher want to help you retire once and retire right. Get more information at therealretireesofnewjersey.com. They never throw the first punch, but they're always a knockout.
Thanks for subscribing. Thanks for downloading. But most importantly, thanks for listening. This is the Real Retirees of New Jersey podcast with Peggy and Randy Fisher. It's all powered by Liberty Financial Group and Artemis Wealth Advisors. You can get more when you visit therealretireesofnewjersey.com. You can find that and all the information here in the show notes. My name is Mark Owens. Now, let's get to the show. Randy Fisher, Peggy Fisher, you're big music heads too. You remember we were talking a couple of weeks ago about going to see Metallica. Do you remember off the top of your head when you bought those tickets, all the stupid little fees that they put on top of it?
There was a hell of a lot of fees in that.
Like there's a service charge, and then there's like a venue fee, and of course you got your taxes.
Yeah,
and
all
then
the fees cost more than the tickets.
I think it was
Yes.
I think it was just on top of what the ticket was $250 worth of all those fees per ticket. Ticket. Yeah. Oh yeah. Because I looked at it and I was like, wait, you paid how much for these tickets? He's like, yeah, but look at the fees. It was like $260 in all of those fees. I think 200 of it was Ticketmaster alone.
Yeah. And then because I'm an old man and I hate people, I always buy seats on the aisle, and they throw on an extra $20 for a convenience fee of sitting on the aisle.
Those are my favorite seats too.
I know, and I'll pay for it.
I love it. Yeah, me too. I'll pay for that. I might have to go to the bathroom. I don't want to be like going past 50 million people.
Excuse me, hi. Excuse me,
Yeah, no.
on.
You're right.
Wear a diaper.
Yes, no, it's so true though. And I always say to him, even when we go to a Broadway show or any show, I'm like, where are the seats?
Yeah.
And he'll go, on the aisle. I'm like, oh, thank God.
Let's talk about what you do when talking about fees. When you take a deep dive into a portfolio, Randy Fisher, how often do you find not just fees, but those hidden fees that can do so much damage to a plan?
There's layers and layers of fees that can do damage to a plan. Dramatic.
And the crazy thing is they have no idea.
Most people have no idea. Most people are in denial.
Yes.
Because they think because they're in a 401k, there's no fees.
Right.
Or they're at Vanguard, there's no fees.
And what's the thing that you always say to them? I always love it. They don't have Red Cross in their building. What do you think? They're doing this for free? Yeah, it's true.
Right. I'm at Vanguard. There's no fees.
Yeah.
Really? No, Vanguard has no fees.
No, they just want to hold your money for nothing.
That's a pretty amazing company. They can make all that money and it has no fees.
Yeah,
right?
we say that.
Pretty
literally.
interesting.
What is that business model?
Yes, right?
I want to duplicate that, my friend. It's crazy. But just think of mutual funds. Mutual funds have layers and layers and layers of fees. And there's a prospectus. That's that little disclosure.
That's from 9,000 pages long.
From 1923 and 1924, the acts of.
And if you see on page 17.
Nobody reads them.
Yeah, no.
Number one, most people don't even read it because they feel that it's filled with jargon. It's out of their
realm.
Repertoire.
Yes. Mm-hmm.
And they have no idea what the hell they're reading anyway. Number two, most people won't read it because they just don't give a crap. Right? They think, oh, I already know what it is. I know what my person told me. I know I got a couple dollars worth of fees or whatever it is. Good. That's great. There's so much information that's in the prospectus that people never take into consideration. And that has to do with what is the fund objective? What is the marketing costs called 12B1 fees? Where does that money go? What are the changes that can be made to the portfolio, or what are the leniencies within the portfolio management team in what they can do or what they can't do? That's called style drift. There's so many things that fees are attributable to that people really don't understand. I mean, even just take one into consideration. I call it a fee, but it's really a tax. It's called phantom tax. And think about this. Have you ever actually gotten a 1099 on money where it's been a down year? People scratch their head and say, wait a minute. I think I lost money this year. How did I get a 1099? I have to pay taxes on something in which I lost money on. Because when you're in a mutual fund, it's considered a pass-through vehicle. And the mutual fund, the company, needs to pass through the tax to its shareholders. If they had a portfolio and something was sold during the course of that year, even though it was a down year, if there was a positive gain within the portfolio, that positive gain is going to be dished off to the shareholders.
Yes.
So you could have lost money and still had to pay taxes. That's absurd. That's one of the reasons why we really don't use mutual funds. Mm-hmm. Number two is they're really not diversified, right? So when you think about it, if I have mutual fund A, mutual fund B, mutual fund C, mutual fund D, there's 4 mutual funds. When we really break them down and we use a portfolio analyzer in our portfolio X-ray analysis, a lot of times it'll show that the top 10 holdings of all the 4 funds that I just gave you an example of, all top 10 are exactly the same.
Yeah.
That's called overlap, right? So why do I actually have to have, that's not diversified, that's focused. And then what are the fees associated with all 4 of those funds, right? Are they of large company, small company? What are we doing here? What are the other marketing costs, right? I mentioned before 12B1 fee. 12B1 fee essentially is a commission to a brokerage house that the mutual fund pays broker dealers for their reps to sell their funds. So let's just say this. If I have a fiduciary responsibility and I work for a publicly traded company, my fiduciary responsibility is to the shareholder. So I have to try to make the shareholder as much money as I can. I have to try to make the company as much money as I can.
Not the client.
Contrary to popular belief.
Right.
So if the mutual fund pays the company more or gives them an incentive to sell it and they make more of it, then the reps are going to be incentivized to sell it for the shareholders.
Yep.
Does that mean it's right for the client?
Nope.
Now, I'm not
Doesn't
saying
feel like it. I mean,
right. And I'm not saying unscrupulously it's not right for the client. But what I'm saying is it may not always fit their need as in the best interest of, right? So when you take all of those things into consideration, there are more things involved than just fees. And, I encompass all those things into fees. But there are layers and layers of fees within mutual funds. Give you another one. How about just the regular overall expense ratio? There's an expense ratio of a mutual fund of, let's say, the average mutual fund's expense ratio is, I'm going to ballpark it, 3/4 of a point, 75 basis points, right? 3/4 of a percentage. In an exchange traded fund, similar, let's just say S&P 500 exchange traded fund, it may be 0.1, right? Or less than that, 0.001. So fractions of expenses to get a similar type of diversification. Why are you paying an exorbitant amount of fees for that? Doesn't make any sense.
And people are so what we like to do here for that kind of thing for our clients is we do something called an X-ray portfolio. And what we do is we take all of your information, all your statements, we take a look at every single thing you have.
The back office staff.
The back office staff.
Thank God. Thank God
for that. Yes. Thank God, back office staff.
Team.
Shout out to the team.
Yes. But what we do is we take all of that, we send it to the back office, and then we get what's called an X-ray portfolio. And it shows us that we can show the clients every little fee that they have. And they're astonished when they're like, wait, what? We're getting charged what? We have a fee for what?
It's a fact.
It's a fact. And we're saying, this isn't our, it's our information. This is yours, Right. But it is like every client. I never knew that. Yeah. I don't think we've ever had a client who said, oh yeah, no, I knew that was happening.
We always hear, my advisor charges me 1%. Well, that's not untrue. That's probably true. But what's untrue is that's not the only fee.
Right.
So when you add on all the other ancillary fees associated with the plus 1%, sometimes you're at plus 2, plus 3% when overall. That's not good.
Yeah.
All right, let's talk about some good fees, though. There are values in fees as well, and you've said it before here that that's what we like to teach people. Are you getting value for what you're paying?
I always say, and this is what we always say too, if you're being actively managed, then yes. And it's so funny because sometimes we'll have clients come in here and I kick you on really hard underneath the desk, right? I did it like twice this week.
So I have bruises.
People come in and say, oh, what this is the fee and blah, blah, blah. And they try to talk Randy down from his fee or whatever. I'm like, wait, he just made you $175,000 in the last couple months and you're now asking about why this fee should be lower. Sometimes I bang my head. I don't understand how. I know if someone made me $175,000 in 3 months, I won't be asking him about his fee. I'll say, you know what? Good job.
Well, the fee in the absence of value.
Exactly. You always say that, Rand. And that's what we say. Right. Exactly.
And the difference between passive management and active management are 2 levels of formulation that you can use. One is called beta. People use BETA. That's for passive management. Essentially, it's risk, right? It's what's the association of your portfolio with the market? Is it just as much as the market or is it less than the market, right? So if I'm in a passive mutual fund, let's just say a S&P 500 fund, and we assume that the market is a 1 of beta, and I look at it and the portfolio x-ray shows me that your portfolio, the mutual funds or anything else that you have within your portfolio, your beta is a 0.85, let's say. Now, that is meaningless unless you say that, okay, your portfolio is about 85% of what the market reaction would be. But here's where it really comes into play. What if you're a 50-50 investor where you just don't have that capability of absorbing that risk tolerance? You can't swallow the losses that come with an 85% profile.
Right.
That's the big difference. And most people take into consideration that, my advisor knows what I am. Oh, yeah, really? I can tell you right now, throughout the course of the month, year, quarter, your risk tolerance is going to change accordingly because you're emotional. It's never going to be the same. If your risk tolerance stayed the same, you wouldn't need financial advisors.
True. So true.
You wouldn't need anybody out there, right?
Yeah.
Because you do the right job for yourself.
Right. Exactly.
But your risk tolerance, when the market's going up, everybody's risk tolerance is higher than it's supposed to be.
That's right.
When the market's going down, everybody's got a coffee can mentality.
That's so true.
If there's no movement in your portfolio,
They're
ladies
not
and gentlemen,
actively
over a
managing.
60 to 90 day window,
Yes.
you have a lazy advisor.
Yeah, you always say that.
In fact, you don't even have an advisor. I call them a gatherer.
Yes.
They're money gatherers.
Yes.
Right? They go around and gather money up like they're gathering sticks for a fire.
Yeah.
And you have become their annuity. Oh my God, we said a bad word. Annuity.
Oh my God.
Right? Nobody likes annuities.
Don't say
Guess
that.
what? You're really not going to like an annuity now. You've become their annuity because they're getting a percentage on your portfolio for them to go out and play golf on Friday, pickleball on Wednesday, show up on Monday at 12 p.m., go to lunch for 4.5 hours, take 3 phone calls, and then basically go home and do it all again the next week.
On your dime.
On their dime.
Right.
Because they're
exactly.
getting paid fees in which you don't even know exist
Right.
that are coming out of your account, right? Alpha instead of beta, alpha basically means what are you getting for what you're paying?
Yeah.
And we brought this up before, and I'm sure you've heard this, ladies and gentlemen. If you've gone to a restaurant and you paid $300 for a great meal and you walk out of there satisfied,
You're good.
you're good,
You
right?
feel good about it, right.
Oh, hey, we may even come back,
Yeah.
right? But if you go to McDonald's and you pay $300 for Happy Meals, you're not going to walk out of there going, hey, that was the best meal I ever had.
Yeah.
That was worth it.
Right.
You know what I mean? Unless I just fed a family of 900 people for $300, that's a great deal. But it's not a great deal because think about it this way. Alpha is, what are you getting for what are you paying for?
Yes.
Yeah.
And if you're paying for someone to do nothing or you're paying someone to do something, wouldn't you want to pay for somebody to do something for you instead of doing nothing?
Yeah.
Yep.
I want to pay for
That's
an
the
active
difference.
manager. That's what
Now,
I
I'm
want.
not saying you need somebody sitting in a place day trading.
No,
That's
nobody's
stupid.
doing that.
That's
Nobody's doing
asinine. That's not what I mean by active management. Active management means manipulating the portfolio, taking some off the top when you're making some money, repositioning that money back into the portfolio in certain spots that have been depressed, that are looking good, that'll over the next 60, 90, 180 days appreciate, considerably, knowing that in the future you need income at a certain point to start toning down your portfolio over time. Passive portfolios don't do any of those things.
No.
They basically just say invest and stay invested for all reasons and all seasons and keep your fingers crossed because in the future, we hope that it's going to be worth more than it is today.
And what we always say about that, some people don't have a risk tolerance for that. Some people don't have the money to stay and wait and await a loss.
Nobody has the risk tolerance.
And we
for
always
that.
talk about, when you do have a loss, how long does it take to get it back? That's right.
Time is the most precious commodity that people
Exactly.
don't take it into consideration.
100%.
And you said something there too.
When it's gone, it's gone.
Yeah.
Randy, you said hope. We hope it's okay.
Hope's
Yeah,
not a
hope
strategy.
ain't
Hope
helping
is
you.
not a strategy.
Hope is not helping you.
908-844-8337. TheRealRetirees of New Jersey.com. At the beginning of the show, we were talking about it's gotten a little warm. Summertime is here. How about going to some concerts? And recently had a chance to go out to Las Vegas. Go check out Kenny Chesney at the Sphere.
It's our boy Kenny.
I'm telling you,
No shoes, no shirt, no problem.
No Shoes Nation, baby. Let me tell you, that man, you've seen him in concert a couple times, yeah? That you were saying?
Yep, we sure have.
I remember we were sitting down in his little, sipping a little blue chair and having a beer, talking about when he really made it, right?
Yes, exactly.
And I brought up, we kind of knew it, but we brought up the fact that, he opened for Tim McGraw.
Yes.
Oh, yeah.
Right?
Is that funny?
And I said to him one time, and he
Yeah.
smirked really nicely, and I said, did you really know that you made it when you actually, all your paraphernalia sold out before his did, before his show?
Yeah.
And he smirked and he goes, that was the day I knew it was going to be.
He did. That's what he said. Yeah, we had a great
awesome.
interview with him. Yep.
And he is 57 years old, still bouncing around that stage
Like
like
a
he's 20.
teenager.
Yes.
Yeah, God bless him.
And his show was
full of
unbelievable. So at the Sphere out in Las Vegas, I'm sure if you don't know about it by now, it is an incredible experience to see an event. It is all LED, 360, well, I guess not 360, well, I guess 180. Anyway, it's a huge screen. Dead & Company have played there. They've done some EDM shows. U2 have been there before. If you haven't had the opportunity, I would say go. Now,
Sharon wouldn't let us.
Yeah.
Sharon?
Yeah,
Sharon.
our friend.
Shout out to Sharon.
Or not a shout out. Thanks, Sharon. Thanks,
She poo-pooed it.
Appreciate you're paying for the next trip, Sharon. So,
Yeah.
if it's something you're into, go look at the videos and go check it out. But I did want to play a couple of clips from conversations with Kenny Chesney and how it pertains to what you do for the families you serve in the area. Here he is talking about the responsibility of being an entertainer.
If I thought a lot about the responsibility of it, it would be overbearing. I mean, it really is. But I've got some really great people around me that have been a part of my life for a long time that helps carry some of that responsibility, because ultimately it is my responsibility. I'm the head of the company, but there also has to be a balance of not thinking about all that responsibility, because if I did, I wouldn't be able to go out there and talk to the people in the audience the way I want to talk to them.
But that's kind of what you do as well. I mean, you do have a responsibility around you with Liberty Financial Group and Artemis Wealth Advisors. Do you feel the same pressure?
Absolutely. I don't even think I don't see it as pressure. Actually,
I don't see it as pressure either.
I don't see it as pressure in any way, shape, or form. But I just like you said too. I mean, we have a wonderful back staff too that helps us, right?
Kenny doesn't see it as pressure.
Yeah.
But you talk about a meticulous planner. I mean, he plans practice.
Yeah.
Right. We've had tons of conversations with him where he's like, "Listen, this is what we're doing today." He would redo it 100 times just to get it right.
Right.
He does not want to make sure. Well, he does want to.
Yeah.
He wants to make sure that everything goes as planned.
And that's how we are here too, meticulously planning to make sure that our clients are getting exactly what they need, what they deserve.
Prevents poor performance.
Exactly, Randy.
So that's your 5 Ps right there. Prior planning prevents poor performance. So with this trip to Vegas, you think that I would have planned a little bit better.
Here we go.
So I'm sitting at the bar and getting ready to fly out to Las Vegas because you know that airport drinks just hit different. Because when you're going on a vacation, not if you're traveling for business, but if you're about to go on an excursion, that cold beer, that brown liquor, that glass of wine tastes a little bit better.
Oh, yeah, it tastes real good.
Before you get on
goes
that.
down a little faster.
It does, doesn't it? And it's about $14 more expensive. It doesn't matter. You're on vacation.
You don't even care at that point.
You're on vacation. So I'm sitting there getting ready for my trip to Vegas. I love Vegas. I enjoy throwing the dice.
We do too.
I get a phone call from my bank. Mr. Owens, we saw some charges on your account.
What?
We've got some questions about that. Can you give us a call back when you get a moment? Well, that can't be good. Hey, it's Mark Owens. How's everything going? Hey, Mr. Owens, is this your credit card number? Yeah, it's my debit card. Yeah. Okay, did you by chance charge $1,200 to something performance in Minnesota?
Oh.
No, I can't say that I have. Can't say that I've been there. Nope. All right, well, we will put a hold on that. And just to be safe, it looks like somebody got a hold of your credit card. We're going to go ahead and shut it down, put a freeze on it, and we'll send you a new card next week. Oh, hey, thanks, guys. I appreciate it. Thanks for giving me the heads up. You guys are great. Cool. Thanks. Click. I'm sitting there. I'm like, oh, good on them. Yay. And then reality sets in.
Hope you had cash on you.
I'm heading out to Las Vegas, Nevada.
With no money.
But no cash.
I grabbed maybe $100.
Yeah, because you knew you had that debit card. It was going to take care of you.
I was going to grab some cash when I get there.
Did you get a job for the weekend?
Onlyfans.com/.
Yeah.
No, seriously, no.
All right, I'm gonna get on that. Let me say.
Mark was dancing.
The Chippendales in Vegas.
I was one of those guys in downtown.
I wasn't going to go there, but I was
I
going to go
did.
someplace else.
Oh, yeah, baby.
Oh, I was the Tuesday lunch guy. So,
He was down the side aisle.
so then I very quickly realized you can't go on a full vacation in Vegas with no cash.
No, you
it is
got to
still
tip a lot to different things, right?
Yes, driven
yes.
economy out there.
Yes.
You better make sure your 100 turned into a couple thousand.
Yeah.
Oh man, I got my butt kicked.
So we weren't getting cash that way either, were we?
Licking the wounds from this one. It was a tough trip. I had to get on the phone the next day. I'm like, I'm in Vegas. I don't have any money. What do I do? They had a branch like 30 miles away.
Oh.
So here I am on my vacation because I go to a credit union. So here I am on my vacation. Got to get an Uber for about 45 minutes, go get some cash, get an Uber back for another 45 minutes. By the way, only to give all that cash right back to the casino.
They were doing you a favor.
Yes.
You realize that, right?
Yeah.
Now that I think about it, I
It
don't
was a
know
sign.
The
It was a
scammer that got me put on a call and been like, thanks, man.
It was actually Vegas.
Thanks for just
It was
the
Vegas
1,200.
calling.
Yeah.
It was Vegas calling.
So anyway, talk about planning. I was not, but you can't plan for something like that.
Nope.
It's like planning retirement with no money.
Yeah.
So I want you to hear more from Conversations with Kenny Chesney. And here he is talking about, as you mentioned earlier, you hate these clickbait articles, Randy. They drive you crazy. The talking heads, the flashing graphics on all of the news channels. Here's how Kenny sifts through all the noise.
I'm guilty of it too. I think that a lot of us are addicted to this. How do I say this? We're addicted to the ways we communicate now, and all the different ways that we get this information every day. Whether it's through your feeds on your phone, or it's news channels, or if it's talking heads everywhere. It's just there's a lot coming at us at once. I had this thought that it's all just a lot of noise, and how do we sift through it to get to a place where we can find balance in our life, and where we don't feel like at the dinner table that we have to have 4 or 5 different conversations going on our phone with 4 or 5 different people while we're trying to talk to someone else across the table from you.
You do the same thing. How do you help the families you serve sift through all that noise of these financial headlines?
Well, it's funny that you bring that up because we laugh. I can actually tell you exactly what news station a client is listening to by what words come out of their mouth. Right,
Sure.
Rance?
It's noise.
And then we say, too, you should branch out. You should maybe listen to some other stations, too, because the one station that you're listening to is a lot of noise.
Caca.
Yeah. And like I said, and we can know exactly what station it's going to be just from what the sentence that comes out of their mouth. Right?
By the way, 2016 Noise was Kenny Chesney's first hit off his new album.
Look at you, Randy, tying it all in.
How about that?
Do you ever have people come to you, though, and they're just like, no, Randy, listen, I understand. You're looking out for my best interest. But blank said this, so I've got to believe it. It's got to be true. How do you talk people down that just refuse to budge?
I tell him, give it a shot. Come back. You know where we are.
Yeah, he actually says that, Marco.
I say, listen, if you have any money left when you're done,
Yeah, let
come
us
back.
know how it
We're here
goes.
Monday through Friday.
And that's when they hand over their, and after he says that, believe it or not, they then hand over the statements. They go, all right, here.
Well, listen, we're not salespeople.
Yeah.
Right? We're here to advise.
Yeah.
And I'll give you as much advice as you want, but it's kind of like that horse that's been through the desert.
Can only
when he
lead
gets
it.
to the water,
Yeah.
if he's just going to stand there and look at it and not drink it, you
Yeah.
can't make him do it.
Right.
Right? It's the same concept. Ladies and gentlemen, when you get here, I can only give you the advice, and Peggy can only give you advice
Right.
that we have. Right? It's
Yeah.
the experiences, it's the professionalism, we've been through the woods.
Yeah, and not
right?
only that, we always talk about the non-emotional
Yep.
aspect of your money.
I think that is-
Non-emotional, key.
It is a game changer.
It is.
Because think about this year. Most of Wall Street is literally still down almost double digits in some cases. I looked at a number of different client statements over the last couple of weeks, mutual funds that they have, they're still negative 15, 18, 12%. Some are break even. Now the market is just about break even.
Right.
Give or take a point or two each day. Most of our clients over the past 2.5 months, I mean, they're up major. Why? Because we took a non-emotional approach. We stuck to our game plan. We have a specific strategy that we deal with, which is essentially we sell gains when they happen. We go and recycle that money back into the portfolio actively, and we make good choices. And we don't make emotional choices. We don't sell on emotional roller coasters. When they're telling us that Iran's getting bombed or tariffs are going to cause inflation or, whatever the noise is, right? We don't take Trump derangement syndrome at a financial level.
Never.
Right? If you do, ladies and gentlemen, and there are many advisors that are out there, and there's many people on Wall Street, and there's many news stations that do it every day, you're losing the game.
Yeah, absolutely.
You're losing the game.
100%.
We didn't do it when Biden was in office. We didn't do it when Obama was in
Didn't
office.
matter,
We didn't do
right.
it when Bush was in office.
It was just
we didn't
about
do it
it
when Clinton was in
being
office. It makes
non-emotional.
no difference.
Exactly.
I don't care what your politics are. I really don't care.
Yeah.
It really makes sense to have a written game plan, know what your strategy is,
And stay the
and
course
stick
of it.
to it.
Yeah.
We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Investment advisor services offered through Artemis Wealth Advisors, a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Artemis Wealth Advisors is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Randolph A. Fisher, insurance license number 9616074, and Liberty Financial Group, LLC, and Peggy Fisher, national license number 189-42003 and 570-5833.